What's going on, guys? Welcome back to the channel. My name is Anfernee, and in this video I want to talk about why having an 850 credit score isn't necessarily the best idea if you are on your journey to building wealth. And because that title is somewhat controversial, because everyone thinks that the better your credit score, the higher your credit score at least, that's the exact reason why I thought that this would be a good video to make, just to go over my personal thoughts on having an 850 credit score or having above a 750 credit score in general, and go over exactly why I think my credit score will be going down in the future instead of going up as I continue to build more wealth and buy more assets to propel my financial freedom journey. And to get right into this video, let's talk about the mainstream idea around credit. And for most people, I would assume that their idea of credit or good credit is that it allows them to buy anything that they want. It allows them to go on a showroom floor, purchase anything in the inventory that they like, because they know that they can get approved for any amount of debt if their credit is high enough. And I think that that notion is the entire problem and the foundation of this video. People who strive to have a great credit score inherently have to incur more debt to get that higher credit score. And because your credit score is essentially a scorecard on how well you pay off your debt, if you strive to have a good credit score, are you telling yourself that you are just looking to get as much debt as possible in the future, or are you just looking to be seen as responsible as possible just in case you have to get debt in the future? Now, in the very early stages of this channel, I was in that latter group. I wanted my credit score to be as high as possible because I never knew when I wanted to make an investment decision, such as buying an investment rental property, or I don't know what else I would have been doing, maybe getting a business credit card. And I wanted to be able to qualify for the lowest interest rates possible if I did decide to incur that new debt in the future. However, my thinking has changed a little bit these days, mostly in part to Dave Ramsey's teaching, but now I don't necessarily strive to have a great credit score. And I'm going to talk about exactly why a little bit later on in this video. However, let's not fly past the elephant in the room. If we're talking about credit scores or why a good one or a bad one is important, it is very important to understand how that credit score is calculated in the first place. And to go over those points briefly, your credit score is basically a number factored from 5 major categories. And these categories have different weights that will overall add up to 100% and then be used to calculate your credit score anywhere between 350 to 850. And as far as these categories go, the first of those categories is your payment history, or basically how often and how well you go about paying back your bills, and especially your debts. And your payment history follows you through your student loan payments, your credit card payments, especially any personal loan payments. The only thing that is not necessarily tracked on your payment history are going to be things like rent payments. However, your mortgage payment, because it is attached to a debt, will definitely be calculated in your credit payment history. And this one is one of the most impactful factors that go into calculating your credit score. And before I actually got my first rental property, I did not realize how important that this factor is. But when I did get my first rental property and I started managing that property myself, I was able to see from the applicants all of their credit history and payment history going back 5 to 7 years, and I can see if they made late payments on any of those loans that they had outstanding within all of that payment history. I could see if the loan was paid 45 days late, 90 days late, 2 months late in a row, and overall it helps the lender, or in my case the landlord, get a better idea of how responsible you are with handling your finances, how likely you are to push off a bill that you don't necessarily have the means or feel like paying. And if me as a landlord in that case saw a pattern of irresponsible payment behavior, then that would give me grounds to move on to the next applicant and not choose to lease out my rental property to you. And a simple way to make this category higher is to pay your bills on time, or at least get up to date with your payment history, so that when you do go to borrow money from a lender, they don't have any reason not to approve you, even if they approved you at a little bit of a higher interest rate. However, the next factor that goes into calculating your credit score would be your overall debt balance. And this more goes to your revolving debt balance. Now, this one is actually very important as well, because lenders for some reason like to see that you have a lot of credit available to you, but you are not necessarily using all of that credit on a month-to-month basis. So for me, for example, I have about a $50,000, maybe a $75,000 credit limit on all my cards, but month to month, I don't keep a single cent on that balance. Maybe if the timeline from when the payment is due and when I make the payment, I may have a $1,000 to $2,000 revolving balance, but overall, I don't keep a balance on any of those cards on a month-to-month basis. And this technically says to lenders that I'm a responsible responsible lender, even though I don't use the credit that is provided to me. Now, this does seem a little bit backwards because the idea of having a good credit score means that you have access to more credit, and because you have access to more credit, it should technically mean that you should be using more of your credit. However, I don't make the rules, and that's just how it works. They want to see that you have access to credit, but you're not necessarily using all of your credit. And then the next factor that goes into calculating your credit score is going to be your credit history. And this is a little bit different from your payment history because your credit history is actually how long you've had your credit accounts open. So you could be an extremely responsible 19-year-old that has made all of their payments on time from the time that they have the opportunity to open a credit card. But until you get 3 to 5 or even 10 years worth of credit history, you are not likely to get into the 800s or even above the 775s as far as credit score goes, because your credit history will be lacking, and you just have to wait it out to give the lender some time to see that you are a responsible person over a long-term period of time. This is especially important if you're trying to get a mortgage, because with a mortgage, you're going to be locked in for over 30 years or 30 years at the maximum. And if you only have 1 year of credit history, it's going to be very difficult for those underwriters to really see you as a credit-worthy applicant because you don't have that credit history to prove to them that you are responsible over the long term. And one of the last factors that goes into calculating your credit score is going to be credit inquiries. And credit inquiries are basically how often that you ask for credit, how often that you ask for a new loan or got rejected for a new loan. And if you're asking for new loans or new lines of credit very often, you may be seen as an irrational borrower, and that kind of throws the red flag to lenders that you may be someone they want to take a closer look at if they're evaluating whether or not they want to lend you money. And the very last thing that I have on my list as far as the factors that go into calculating your credit score, and that is going to be the types of credit you have. So if you have a diverse array of credit accounts, whether that's mortgages, credit cards, personal loans, auto loans, basically saying that your credit is not just one specific type of credit, then that goes fairly well as far as letting lenders know that you are responsible with different types of debt. But with all that being said, and even though all of that sounds very nice, now I want to move on to the part of the video where I believe that none of this means much to a person who is actually trying to build a large amount of wealth. Because as I mentioned earlier, let's talk about the reason why you want an 850 credit score. If you break down the reason why you want an 850 credit score, is it because you know that when you want a fancy new toy, when you feel like you're ready to buy a big house or a big boat or anything like that, you know that you will get approved for that loan no matter what? If that is the reason why you want a high credit score, then I am sorry to say that you will be limiting your options as far as building wealth goes, because building your wealth just to have the ability to get more debt whenever you want it is a recipe for disaster, because it feeds into the temptation and impulsiveness of humans to spend money that they don't have, to get things that they don't want, to impress people that they don't like. And as I mentioned for myself personally, I believe that my credit score will be on a steady decline in the future, because as the future goes on, I plan on decreasing the amount of debt that I have and also closing the amount of credit lines that I have open. And as I close more and more credit lines, and as my access to credit or my credit lines get smaller, I won't be seen as much by the credit bureaus as a healthy borrower, because I won't have as much information for them to feed on to give an accurate credit report of my financial readiness. And because I will be closing credit lines and my credit score will be going down, I personally believe that it will act as a wall preventing me from accessing new debt that I impulsively want to buy. Recently on the channel, I talked about I bought a 2022 Tesla Model Y. Let's say I kept all of my credit lines open, had an 800 plus credit score, and I just one day decided to trade that Tesla in for a 2024 Tesla Model Y. Well, if I had a great credit score, that process would take me all of about 20 minutes before I'm driving home with buyer's remorse, because I knew that I did not want that car in my long-term plan. However, if I had a non-existent credit score, then it would take lenders a little bit of time to decide whether or not they wanted me to trade the car in, and that hesitation may give me enough time to make a more rational decision for my financial future rather than accessing debt just because it was available to me. Now, don't get me wrong here. I'm not saying that just because I won't have an 850 credit score because I'll be closing lines that I will have a bad credit score. There is a very definitive line from having a bad credit score and having a non-existent credit score. Having a non-existent credit score means that you simply don't use debt to finance your purchases. It simply means that you just don't use any types of debt to finance your life. Now, getting to the point where I'm debt free completely will obviously take a lot of time. However, as I move towards that goal, I do believe that my score will start to decrease. And having a bad credit score means that you still are accessing your debt, you still are using your debt, you're just using it in a very irresponsible manner. And I don't want you to take that point from this video. If you already have debt, or if you need to use that in the future, you must use it responsibly so that you get all the benefits of a good credit score. But if you're like me and you plan on abolishing that altogether, together, then that is where my objection comes to having an 850 credit score. I just wanted to make that point abundantly clear in this video. So when you go about weighing the pros and cons of having a good credit score or having a non-existent credit score, I truly believe that having that good credit score leads to more consumerism. It leads to more fancy purchases. It leads to more overspending that will ultimately lead you to not being as far on your financial journey that you could be had you not had access to those purchases. Now, I'm not afraid to say that you should live abundantly. You should be able to enjoy everything that life has to offer you, but I believe that you should enjoy everything that life has to offer you in the place that you are right now. You should not be living as if you're making $30,000 more than your annual salary if you're not actually making that salary amount. So finding ways to enjoy life to the fullest within your means will be one of the most important and most impactful ways that you can live a meaningful life without casting a financial burden on yourself in the future. So that's pretty much all of my points for this video. If you found value in this video and you want to see more videos like this, then hit that subscribe button for your boy, and also hit that like button, as it really does help the channel out and pushes it up a little bit more in the YouTube algorithm. Also, I will be doing a little bit more behind the scenes on how I set up my YouTube studio, and because this is technically a side hustle channel as well, that will be a part of a side hustle series that I may or may not be starting here in the future. So if you want to see more videos like that, then comment down below. But in the meantime, I will see you in the next one, guys. Peace.